Appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Kim Slater from Kimber Capital, and joining me in the studio tonight is Tony Lecantro from Lecantro Capital and Simon Gazowski from Bereford's Financial Planning. Gentlemen, today the share market was playing chicken with the commodity markets. Share prices of our major resource stocks were again sold off, trading as if the iron ore price was $80 a tonne. Currently it's $134. So the question we're going to have to discuss tonight, who's right? Is it the shoot first and ask later equity market? Because Rio's off 20% since early February, and one of the major investment banks had a sell recommendation out on the stock. But the flip side of that is we've got global steel growth, or demand increased, or is forecast to increase about 2% over the next 12 months, and China growth seems to be on track for a 7.5% GDP, but the market doesn't believe any of that.
No.
So, you know, who's right? Is it the equity market or is it the commodity markets, Tony?
Well, the issue is, it's all in relation to Goldman Sachs saying that the iron ore price is going down to $80. But what people don't realise is they're saying it's a gradual process. But you're right about the shoot first. So Fortescue are saying it's going to stay around 120, 130, which is a fair call. But my viewpoint of the iron ore stocks, and I hope I'm wrong, is that the risk reward just doesn't stack up, and I would have sold. Okay,
what's an interesting thought. What, you're bearish on iron ore altogether, or you think the commodity market is right, that the price is gradually going to $80 a tonne?
Well, it doesn't really have to go to $80 a tonne. If it starts to drop and then sentiment wanes, a lot of these companies, unless they can produce the profits, investors aren't going to be interested, and that's what's happened to a lot of gold stocks. That they've suffered as well, even though they're still making healthy margins. Yep. So I think it's a case of sentiment. And you saw when Fortescue were in all sorts of trouble, they were questioning their solvency. So they've had a great run. The stock at one point went to $136 equivalent, and around, I think they're around $380. I think the risk, you know, it's still going to be institutional trading stock, but I just think the risk is to the downside in these stocks, even though I hope Goldman are wrong.
So what did you make of Simon? I mean, you're not a great fan of iron ore stocks in the first place. So, your sentiments with Goldman's on this matter of the iron ore price?
I think Goldman's are a little bit behind the eight ball. We really should have been reading this report about a year ago. China was softening at the time. The US recovery was questionable. But now, I think medium term, I think iron ore can still be quite strong. The Chinese economy is now recovering. They've got new leadership in place. A lot of companies are now winding back expansion plans. ABARE brought out some good bullish forecasts today. So I think long term, this is actually still a pretty good sector. But I agree, short term, the stocks could keep falling. There's a lot of selling that can still come through the market.
Well, this selling that was coming out of the UK, and it seems to be motivated by what's more happening with the pound than anything else, sort of suggests that if you look at the price of the dual listings of Rio and BHP, you get a price of about $48 for Rio and about $26 for BHP. So it seems to be a whole new set of dynamics that are driving this market. Anyway, if you've got a question about stock or shares, our phone lines are open on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. So again, welcome to the program, and our first caller tonight is Mark from Butterham. Welcome to the program, Mark.
Evening, Kim. Thanks for taking my call. Just about two positions I'm in, Brambles. Just wondering a fundamental on, I don't know if you guys are doing technical tonight, on that. With the American recovery, I feel it should be good. I'm up a few bucks on that. And if you got time, Wally Parsons, what do they think of that?
Okay, well, we'll see what we can come up there for you, Mark. Brambles, first of all, Simon, what are your thoughts on it?
Brambles, I think is quite a good business longer term. You're right, they've got a really big exposure to the US market. They had a fierce private equity competitor there that was taking a lot of clients away, but that private equity competitor is now in a bit of trouble and they're winning business back off them again. Add to that a good US economic recovery, and I think Brambles can do quite well in this environment.
Is there a bit? I mean, is Mark's up on this? Do you stick with Brambles, or is there a switch into something else? I mean,
I'd stick with it. I think
what's your price target on the stock?
Don't have one.
Don't have one. Okay. All right. Well, let's talk about Worley's then. I mean, this has been a volatile stock. And what are your thoughts on thoughts on Worley? I mean, some are suggesting that you're better off being in Leighton's than you are being in Worley. Do you agree with that, or do you still recommend Worley's?
I think these big engineering businesses have really been struggling. My preference in this sector would actually be Austin Engineering. I think they're exposed to copper, iron ore, and some of the more, I guess, bullish parts of that market. And I think that has more growth in it. Whereas a Worley and a Leighton's, I think they just can't grow as much as they used to.
Tony, you're looking in at the mining sector from
Yep.
from the sidelines, and as far as things like Worley Parsons are concerned, you got any thoughts on it?
Probably a little bit at the upper end for my liking, and I honestly think that Cyprus is a good excuse for the market to have a bit of a rest. So certainly, I would have certainly looked at taking profits in those stocks.
Well, look, one of the things that we've been looking at over the last couple of weeks is how hard the spec market's been running, and what I'd like you to do for our viewers tonight is just recap, if you can, very briefly on something like Sirius.
Yep.
As to why Sirius is so hot, why the stock's been running so hard, and why some of the brokers are talking about this stock being worth $10 a share and it being the next Voisey Bay. Because when I look at what they've drilled, it seems like there's a handful of drill results. So how do they manage to extrapolate out and come up with something like that?
Well, I think Sirius, it's just been, the market was absolutely dead last year, and I think it gave everyone a ray of hope. And it's certainly, when they drilled into Nova, the stock ran to 24.5 cents and back to 19, give or take, and then it was on for young and old. But Sirius has had the beauty of having nickel sulfide. Once you're onto it, you do a bit of EM, drill some more, find a conductor, and they've ended up with more conductors at an Andre Roux concert. So what they've done is just drilled into it, and Nova's turned it now. They've got Bollinger as well. But some mining people say that the worst thing you can do with a discovery is put a resource on it. It's like the worst thing a man can do sometimes is put a ring on it. But now Simon Tonkin from Patterson's has been calling the resource, and he was, I think, 30,000 tonnes out. I think he predicted some lower grade, but and tonnes. So that resource has pretty much been forecast, hence why Sirius is now struggling, because the expectation now has been removed.
But we're talking about a resource which is nickel here, and nickel isn't the fanciest of commodities to be in. Although these are massive sulfides, it's not the easiest stuff in the world to mine and to treat, is it?
Nickel sulfide with the grade's around, I think it's 2.4%.
Is that high?
It's sulfide. It's not a laterite nickel. They don't have to blast it with acid. So I think the thing is that the nickel price is quite low, but it just shows that speculators are keen to chase anything, whether it be gold, even a major zinc discovery. The market will go nuts over it. I just think people are looking for some hope, and that's fueled this day trading frenzy. But Sirius now have got the hard work. They've got to drill into Bollinger and keep the momentum going as well.
I mean, it's stark contrast of what's happening with Sirius as to what's been happening with Sandfire. If you look at where Sandfire's actually come out of that exploration stage into the production stage, and the market doesn't want to know it anymore.
No, I think Sandfire is faced with a 7-year mine life, and they really, I mean, DeGrussa, I think they'll admit, was a bit of a fluke. I think there was a dare for a female geologist to drill a deep hole. They're only looking for gold, and they've drilled into this $1 billion prize. So I think the challenge now for Sandfire is to grow that company via acquisition, and they're also starting to move into Queensland. So Sandfire now has got to find some exploration upside as well. So the production story, everyone knows about it. DeGrussa was a fantastic discovery, but DeGrussa occurred when the market was crap. It's just like Nova, and you even go back to Prominent Hill in 2001. The market was that down and out that these stories just kept on going, and the case with Sirius is it probably overshot.
Okay, well, hopefully that's going to provoke a few calls tonight from people that are in the stock that want to